All right, welcome back. Let's go to our next page. So we're gonna look at procedure 1, separation of duties. Okay, let me read this off first. Very important. Separation of duties is used to discourage fraud and theft, as well as to ensure the accuracy of accounting data. Different people should carry out the task of recording cash received and the task of actually handling the cash. So it's basically saying at least two people should be dealing with cash. One person receiving the cash from the customer and another person actually recording how much cash was received. So in order to steal the money, both would have to work together, which will make it much more difficult to steal. It still happens sometimes. Some bigger companies will have 3 different people look at it, 4 different people look at it. But it's a good idea to separate the duty of handling cash amongst more than one person. Okay, so that's what that first part is really talking about. So see that you have already seen this type of division of duties. Actually, you haven't, so never mind. Ignore that one sentence because we didn't cover that chapter. You may have last year. Okay, so let's go into a little more detail. The second procedure, immediate listing of cash receipts. So cash receipts consist of cash received at the time of the sale, over the counter, payments made by debit card, and the checks received by mail in payment of outstanding amount. So that's all the cash. So cash received right away, cash received with debit, and then checks received in the mail. That's all cash, right? So what it's talking about, all cash should be recorded as soon as it's received. There shouldn't be a waiting time. It should be recorded that same day. Okay, so cash registers. So these are the things that are usually used to record cash sales as they occur, as they happen. So, and cash registers give receipts. Normally, let's see here, the book talks about so you'll have different number of receipts for different people. Let's see, I'm pretty sure it should be on the next page here. Actually, before we go to the next page, this part is important right here. The customer assists with the control system by preventing an error in recording a cash sale and by preventing the employee from ringing in a lower amount than that charged the customer and then pocketing the difference. So you'll see sometimes people try to commit fraud by, if they're selling something to a customer for say $50, and if the customer cannot see what's being rung in on the cash register, the employee may only ring in $30. The customer still gives the employee $50 and the employee just pockets the difference. So that's wrong, and the customer can help in controlling this by actually looking at what's being rung in on the cash register. So that's one step. That's one control procedure. That's a good thing. Okay, so remember that. You want to remember this. How can a customer help with controlling cash? So you want to remember that. Okay, let's go to the next page. Okay. Here we go. Pre-numbered sales slips. Okay. So let's address what's a sales slip. That's just a receipt. All right. In the older times, people will actually write the receipt. Here you'll get the receipt will come out of the cash register, and there will be a few copies. Okay. So multiple copy of sales slips are prepared. One copy is given to the customer, so the customer can have their record, and two are kept for businesses. This is, let's, in this case, in this book, I know sometimes businesses only keep one, but let's say for purpose of this book, let's talk about two being kept for the business. Okay, so at the end of the day, all the sales slips are totaled and compared to the cash register tape and the actual cash and debit payment slips on hand. So everything is going to be compared to each other. The slip coming out of the cash register at the end of the day will tell you this is how much cash the register took in, this is how much debit debit payments the register took in, this is how much credit payments the register took in, and then you can actually add up all the cash sales slips, cash receipts, and then compare it to that total. Same thing with debit, same thing with credit, all the individual transactions. That's a good procedure. Okay, now all these documents, all these sales slips, all these receipts will be pre-numbered. So what does that do? That stops an employee from, say, not ringing in, or sorry, not that, taking a sales slip, throwing it away, and just keeping the cash. If an employee throws away a sales slip, the accountant that looks at all the sales slips sees one missing and says, okay, where is this one? All right, and that brings up the question, then that employee can get caught, or it stops the employee from stealing. Now, sometimes sales slips get destroyed, and what we have to go and do is write void on those sales slips that record that when we receive cash. So when we write void and still submit it with all the other sales slips, then the accountant knows that, okay, this sales slip wasn't used. So every single sales slip is there, and the accountant will see all those numbers. Okay? Cash received by mail. So again, you're separating the duties here. One employee will prepare a list of all the checks received. You don't actually receive bills or coins